Personal finance practice problem using OneNote. Budget versus actual analysis. Prepare to get financially fit by practicing personal finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side, the Practice Problems tab down in the 2200 Budget versus Actual Performance tab. Also note, when using OneNote, take a look at the Immersive Reader tool. Our practice problems will also be in the text area with the same name, same number, but with transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we got the information up top, calculations on down below. We're going to be focusing in on our budget versus actual. The typical process, of course, being where we're going to budget first, think about what's going to happen in, say, the next month. Then the time frame will pass for the next month, and then we will want to be comparing what actually happened, what we actually did, the performance that was taking place versus what we planned to have happened. Do a difference analysis of the two, taking the change or variance between them, and then try to use that information to budget into the future to see if we can change behavior or better plan for that process. So the typical layout will be thus. Down here, we got the expenses. We're going to have the budgeted numbers, the actual numbers, the difference, and then the deficit and the surplus that we'll take a look at here. Now, note that when you're doing this in practice, you might use different software in order to do this. This is just going to be a quick kind of small example of it. But you might use, if you're using like a QuickBooks system or something like that, that's a full service accounting system, then you'll be actually entering the data as you go. And you can enter, say, a budget into that kind of system as well. But even still, you'd probably want to do the budget actually outside in Excel. And then you actually enter the budget, which is the forward-looking thing, into the software. And then as you actually enter the financial data into the software, when time passes, which is what the software is designed to do, it will generate a nice report, which will look similar to this, a budget versus actual report. If you're using other software that basically gives you the ending balance number, like financial software, then you're going to have to create some other tool, possibly using Excel, to basically compile a budget versus actual, which would look something like this. A lot of Excel templates that you can use for something like this, and there are simply, budgeting tools that you can take a look at as well. But the general concept for all of it will be similar. You want to plan what's going to happen, then see what actually happens, compare what actually happens to what was planned. So here's going to be the budgeted numbers. We got food, auto, rent, clothing, and personal. We're just going to look at these expense items and do the comparison. And then we're going to imagine that time had passed, and then we categorized in these same categories. We compiled that this is what we actually spent on those same categories. Then we can put it into our budget versus actual, which would look something like this. We would have the expenses, let's say, on the left-hand side, which are the food, auto, rent, clothing, personal. We would have the personal numbers that we had populated up top here, and just simply compare them to the actual numbers, and then we'll run a difference calculation between the two. In this case, the budget is on the left-hand side, so we would then take the budget minus the actual numbers, and in this case, we have an $80 difference. Now, normally, when you're thinking about a budget versus actual, your goal is usually to spend less money. You're usually trying to trim down the budget because that would give you, more savings and whatnot. That's usually what you're trying to do. That would be how to adjust your habits and whatnot in the future. However, note, if you've worked with budgets in like a not-for-profit setting or within a company and whatnot, then it can get kind of unusual, because obviously if you're budgeting in a certain department or something like that, then sometimes there's incentives that you want to actually spend the entire budget so that they don't allocate you less money in the future. So notice that if you're working in an area where where you're getting money based on the budgeted numbers, and you've worked in budgets in that scenario, then they have different incentives, right? They're going to be worried that possibly if they spend too little money, they might be penalized by not getting as much money budgeted to them in the future. In our case, for personal finances, usually that's not the case, right? Usually we're saying, okay, if I can save more money in some area, that's great. And then possibly when I plan next month, I can plan more appropriately and allocate my money where I think it would be more better to spend. And so that would be the general concept. So we got the auto expense was at the 436 for the budget. We spent the 484, so we were over on the auto expense, which we're going to say is a deficit in this case, so that would be bad. The negative numbers are bad the way it is set up here. The rent, notice the rent is the same because the rent would be something generally that would be kind of a fixed cost. You would expect that we would be able to guess quite accurately what the rent is, given the fact that the rent is usually a fixed cost and from a behavior standpoint doesn't vary from month to month, but stays the same. So that one you would expect our budget to be right on, and you would expect then that not to be something that we're going to put a lot of time into considering about when we think about short-term or month-to-month budgeting. It is something we might consider in more longer-term budget when we're thinking about budgeting 5 years out or something like that. Clothing, we got the 240 versus the 275, so we spent a little bit more on our clothing costs, so we got a deficit with relation to the clothing. We could see whether or not that's going to continue next month, or maybe we bought more clothes. I had a bunch of holes in my socks, so I bought like 6 years worth of socks today or something, hoping that they all match, or, whatever. And then you can budget next month. Personal, note that this personal category, just from a category and expense type of category, that personal category is kind of similar to miscellaneous for a business. And so it doesn't give you a lot of detail as to what you actually spent money on. So note that a lot of people, when they kind of create their expense categories, they're gonna err in two different directions generally. Most people either put way too much detail in their accounts, and then it's you got a lot. It's nice to have that information, but there's probably too much. You're probably working more than the information's value is to have so many accounts. And there's other people that basically have way too few accounts. They basically just have a couple accounts on their expense accounts, and they would probably be benefiting more by having more accounts. So, for example, if you had a personal account, similar to if you had a miscellaneous account for a business that has, 80% of your expenses in it, in an account that says nothing about what you actually spent the money on, then that could be a problem, right? You would expect this account to be fairly small. And so just from an accounting standpoint, just realize, when you set up your accounts, how much detail do you want to have in it? And if you got that catch-all account, then are you putting too much or too little, into the catch-all account? So this one is going to be the 65, and we actually spent under that. But like I say, I may not know exactly what to do from an actionable standpoint if that was a significant difference, given the fact that I don't know what exactly this personal account, consists of. So if you're finding significant differences there, you might want to break out that kind of miscellaneous account to a more detailed account. And then if we were to add these up, the 80 minus the 48 minus the 35 and plus the 65, we get to the 62, which we can add up the sum of the differences, and we can double check that by taking the difference here. So let's pull out the trusty calculator. The calculator's saying, you're not even using me over here. So let's 80 minus 48 minus 35 plus 65 is the 62, which we can also verify by taking the total difference. 2681 minus the 2619 is the 62. Also, just realize that whenever you're looking at something like this where you have this difference down here, you might say, look, I took the total difference between my expenses, total budget expenses versus total actual expenses, and I only have a difference of 62, so maybe I won't even go in and look at the rest of it, which that might be fine, but just realize that even if this is a small difference, it may be consisting of very large swings within some of the individual categories, right? You could have a swing up here that's, over by 5,000 and the other one's under by, 4,020 or, something like that, that's when you add them together, nets out to a small difference. But if you were to see the individual categories, you'd say, hey, there's something very strange, within there, or maybe there's something that I need to look at in more detail. So just realize that, that could happen quite often. That's the point of breaking out, and you got to think about, is it worth my time to break out in more detail or not? How much time do I want to spend on certain things? That's the cost-benefit type of analysis, decision-making process for the budgeting.